So good to have you join us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have a lot coming up today, so let's get started with the day's highlights. With China's zigzagging markets and North Korea's latest claim of a hydrogen bomb test rattling local markets, the Korean government puts risk management on top of its agenda to ensure financial stability. What kind of basic strengths does the Korean economy hold? We'll sit down with an expert to talk about ways the local economy can stay healthy amid a flurry of economic uncertainties at home and abroad. But first, the Chinese stock market pulled the plug on trading again for the second time in just 3 days after the CSI 300 index plunged more than 7% on Thursday, closing off the markets after a brief 30-minute session. Key shares dropped 5% when the market first opened, tripping a circuit breaker suspension for 15 minutes. But the selling picked straight up again, triggering a halt on trade for the rest of the day. This comes after a surprise depreciation of the yuan from the People's Bank of China, which set the daily yuan-dollar guidance rate 0.5% weaker than the previous day, the largest weakening margin since August last year. The sell-off on the market is said to have stemmed from concerns that the yuan will slide further and set up fresh concerns about the health of the world's second largest economy. And with that, let's now take a quick look at how the markets fared here in Seoul today. Korean shares ended lower on Thursday as China's market rout and increased geopolitical risks from North Korea's claim of a hydrogen bomb test dented investor sentiment. At the closing bell, the benchmark KOSPI dropped 1.1% to close at 1,904.33, while the tech-heavy Kosdaq also slipped 1.11% to finish at 679.66. On the foreign exchange counter, the Korean currency sank to a 4-month low against the greenback, ending at 1,200.61 against the U.S. dollar. Now, on top of China's market woes, we had North Korea claim yesterday that it tested a hydrogen bomb, rattling Asian markets once again. So officials in Seoul have been holding a series of emergency meetings to try to gauge the impact of the latest events on the local financial market. Ari Kim-min-ji reports.
Risk management should be of the utmost importance this year for financial stability in the face of lingering economic uncertainties at home and abroad. That's according to Im Jong-yong, the chairman of South Korea's Financial Services Commission, who was speaking during a meeting with experts and officials from related government agencies. The top financial regulator noted that while the current North Korea issue will have a temporary and limited impact on the local financial market, he stressed that it's important to be proactive in dealing with what is a fluid situation. Im added that geopolitical risks in the Middle East, as well as a growth slowdown in China, are some of the global uncertainties that require constant monitoring.
The uncertainties at home and abroad are high, so there is a need for flexible and rapid responses. We will push for structural reform to lift Korea's potential growth rate, as well as strengthen the country's economic fundamentals.
As for local risks, Im said households and companies need to better manage their debt, adding that the government will speed up the restructuring of companies that are insolvent while conducting regular inspections on their progress. The regulator also said that the Commission will double-check its contingency plans to guard against any fallout from the developing situations and be fully alert to respond to any repercussions in the financial market. Kim Min-ji, Business Daily.
Meanwhile, the World Bank has cut its forecast for the global economy this year to 2.9%, as we continue to see weakness in developing economies. Its prior estimate made last June was 3.3%, and the global economy advanced 2.4% in 2015. According to the World Bank's biannual Global Economics Prospects report released on Wednesday, developing countries are expected to collectively grow 4.8% this year, up from a 6-year low of 4.3% last year. But the bank warned that a slowdown in several major emerging economies, including China and Brazil, might have fairly large spillovers on other emerging markets. Meanwhile, economic growth is forecast to enter the 3% range in 2017. New data from a local financial institute show the number of Koreans who now hold a home buyer savings accounts has hit a record high. Our Lee Joo-young tells us why and what change this might bring to the housing market.
With the country's benchmark interest rate falling to a record low of 1.5% last year, an increasing number of Koreans have shifted their savings plan strategy to one particular account that offers holders a relatively higher rate of 2%, the Home Buyer Savings Account. According to Korea Financial Telecommunications and Clearings Institute, the number of home savings account holders increased to 19.8 million people as of November, up 13.8% from a year ago. And experts agree that the number of these account holders has already surpassed 20 million as of December last year, nearing the total number of adults in the country. With the surge of people who own home savings accounts, those who qualify as premium members has increased as well, meaning they get first dibs on initial home purchases. To become a premium member, depending on the location and size of the home, account holders must have anywhere from $2,500 to $12,000 in their account for a minimum of a year in the greater metropolitan area. Given that roughly 1 out of 2 home account holders have the premium title, experts say competition among Koreans for apartment lottery contracts in popular districts will eventually get fiercer down the line, as the benefits once enjoyed by those with the upper hand have in reality become meaningless. Lee Joo-young, Business Daily.
It's still quite rare to spot an electric car here on the roads of Korea, but this year might be the year of change. Preparation is underway as auto companies take turns launching new eco-friendly models, and infrastructure needs are also addressed. Our Eunice Kim has the story.
Electric cars are still a source of curiosity at the showroom. To purchase one is another question.
The conditions need to be right. If I buy the car, where do I charge it?
Starting this year, it's going to get a little less inconvenient to drive an electric vehicle. 150 new EV quick charge stations will be constructed, adding to what currently only makes up 3% of gasoline stations. Another 1,000 electric stations are in the pipeline within the coming 5 years. Incentives, including special discounts, will be rolled out for drivers of electric vehicles, differentiated with blue license plates. Exclusive parking spots and charging stations will be built into new apartment complexes. And auto companies are lining up to unveil their own versions of green vehicles. Hyundai Motor is set to launch the Ioniq in 3 models, a hybrid electric, a plug-in hybrid, and a pure EV this month, going directly head-to-head with Toyota's ubiquitous Prius. In partnership with LG, GM Korea will bring to market a long-range Chevy Bolt EV that travels 80 kilometers on a single charge and another 640 kilometers through its power-generating engine. After selling some 1,600 SM3 EVs following their 2013 launch, Renault's Samsung said it will concentrate on sourcing the local taxi market, on the notion that replacing cabs with zero-emission cars will have a bigger impact on cutting Korea's carbon footprint. Beginning with 50,000 hybrids and 10,000 EVs this year, the Korean government anticipates the country will raise the curtain to an era of 1 million eco-friendly vehicles by the year 2020. Eunice Kim, Business Daily.
As we are about to wrap up the second week of the new year, the Korean economy continues to be threatened by a number of small and big global risks. But is the domestic economy healthy enough to withstand major fluctuations and risks? Let's find out.
On the first trading day of 2016, Asian shares took a hit from China's stock market, which saw the CSI 300 plunge by more than 7%. Triggering a circuit breaker and suspending trade for the rest of the day. Korea's benchmark KOSPI lost more than 2% on the same day. But just as markets seem to be stabilizing from Monday's shock, trade of Chinese shares was suspended again on Thursday after the benchmark index for its circuit breaker nosedived more than 7% for the second time this week. To make things worse, North Korea announced yesterday it had successfully tested a hydrogen bomb, fueling market jitters. Following the announcement, the won slid to a 3-month low while the KOSPI fell again, amid warnings of further market drops if risks such as China's economic slowdown and North Korean threats continue. What can Korea do to hedge against continued uncertainties from abroad?
And to tell us more about this, we're now joined by Professor Lee In-ho from Seoul National University. Welcome to the program, Professor.
Thanks for inviting me. It's great to be here.
All right, great. Well, what's the biggest reason behind Korea's economy being directly or indirectly being impacted by so many small and big external uncertainties? I mean, does this kind of show that foreign investors see Korea as vulnerable to external uncertainties?
Not necessarily, though. Korean economy is small open economy, and we have been making a lot of money depending on the international market, and that permitted the exposure to the international market. And when the time is good, we make more money. However, when the time is bad, we lose a lot. So that is the problem. However, that doesn't mean that we can ignore domestic factors to amplify the problem caused in the international market.
All right, let's take some time to examine the country's economic fundamentals. Now, just last December, Korea received its highest ever credit rating from Moody's. And we're now wondering, what is this assessment really based on, though?
Okay, this credit rating is kind of a relative measure, and it's good to have a better rating. However, we have to understand that we are doing better than other countries. However, it doesn't mean that Korea is doing absolutely well. So that is the caveat we have to keep in mind. But we have to also acknowledge that Korea is growing in size and make a better or bigger impact in the international market, which is recognized by the credit rating agency.
All right. Well, 3 main factors that are used to help measure the country's fundamental economic strengths would be exports, household debt, and foreign exchange reserves. Now, why these 3 factors?
So those 3 factors represent 3 different aspects of the economy. First of all, export represents the competitiveness of the firms. Second, the household debt represents the robustness of households against financial shocks. And the third one, this foreign reserves, that represents the robustness against the foreign investors' capital flight.
Well, what kind of impact has this negative growth streak in exports had on our economy, and what challenges does this present then?
I think the biggest problem is Korea is slowing down in terms of growth rate, and partly because of the international market change. And we have to address this challenge by developing better technology. In economics, to have healthy growth, you need either population growth or technological development. And this population growth is not doing well, so we have to concentrate on the technological side.
And we've been saying again and again for the past year about how serious this problem surrounding the household debt has been on the country's economy. Now, how much it needs to be managed this year in order for us to make sure that risks are kept at bay?
Okay, it's not easy to give a target number because in terms of some measures, Korea had worse number than America even at the time of global crisis. However, the difference was in Korea, those debtors had incomes to cover debt service. So it really depends on who has those debts. And we have to make sure that these debts are not growing too fast. And it's going to take a little while to deleverage, which means the debtors should pay back.
All right. Well, we have now the foreign exchange reserves, which is, according to the Bank of Korea yesterday, the figures declined for the 2nd consecutive month. But then still in November, Korea stood as the 6th largest holder in the world. Now, is this more than enough, though, to keep us in the healthier range?
Indeed, we are among those countries with a huge amount of foreign reserves. But I think this game is a little bit strange because there is no lower limit or upper limit. And even if you have enough dollars, you are still exposed to substantial risk. So I like to approach it from a slightly different angle, which is, after all, if you have enough dollar or the possibility of getting enough dollar, then you are safe. So instead of accumulating huge amount of foreign reserves, why don't we approach United States or big countries so that we have intergovernment currency swaps in the case of problem?
Well, considering that Korea is highly foreign dependent in many sectors, what areas do you think we need to improve on in order to, I guess, strengthen our core and also boost sustainable growth?
Okay, it doesn't have to do with this international exposure, but we say that the recession is a good time to have some kind of cleansing of the economy. Over time, doing business, people make a lot of contracts as well as irrational commitments. And when the time is bad, those things can be undone. And we have to make sure this restructuring takes place during this recession so that when the time gets better, we have a better chance of catching up.
Right, and also to keep our healthiness of
Indeed.
our economy, right?
Indeed.
Okay,
Yeah.
thank you so much for coming in today, Professor.
Thank you.
And that wraps it up for today. Thanks so much for watching, and we'll be back tomorrow at the same time, same place for your Business Daily. Until then, goodbye.